Today we have with us a very special guest, the one who has just made a big acquisition in the US worth over $600 million. Mr. Piramal, thanks so much for joining us and congratulations on the deal. Mr. Piramal, you've made two big global acquisitions in the last 30 days. First of all, take us through the Decision Resources and what it brings to the table for Piramal Healthcare.
Decision Resources is a Boston-based company which is in the information space in the healthcare industry. So what it does is that it gives predictions and it gives analysis, high-quality analysis and analytics in the healthcare space. And it is a company which has had a very successful track record in the special segments that it is in. It is a leader. It has a turnover of, this year we expect it to be in $160 million, has a growth rate of a CAGR of 20%, and it is the leader in its space.
Right, and talking about the numbers, how will it impact your balance sheet then?
So the way we will fund the $635 million is with a mixture of debt and equity in the proportion of 1:1. We will raise the debt against this asset in the US, and the equity will be provided for by Piramal Healthcare.
In terms of revenue generation, you said $160 million. In terms of profits, what are we expecting, and from when can that start kicking in for Piramal Healthcare?
So this is a highly profitable business. It has free cash flows, and you will see the profit coming in as soon as the deal is consummated. So the deal, I expect it to be completed by the end of June, and after that, immediately thereafter, there will be profits in this space.
Right. So you've made two acquisitions in quick successions, the deal with Bayer and then now with Decision Resources. Now, talking about the two-pronged strategy that you've always been harping on, that is, one, clinical trials are already going in-house for Piramal Healthcare, and then second, inorganic growth. So is this shopping spree going to continue further, and exactly in which space are you looking next?
So as far as the pharmaceuticals and healthcare space is concerned, I don't see there's going to be any major acquisition now. The Decision Resources group we're spending 3,400 crores in it. It is a large acquisition. And the strategic reason for buying this is that, as you said, the drug discovery program that we have is really in discovery and development. So a lot of funds are going in towards that. That's investment for the future. So we thought that we needed to balance out the portfolio of the pharmaceutical and healthcare and get a business which is generating these free cash flows, which is what DRG does. So to some extent, shareholders can see some revenue coming in and profits coming in from DRG while we continue to invest in our drug discovery and development programs. The molecular imaging that we acquired was in some ways in the same space of still investments, but we will launch the product somewhere in 2014, 2015.
So DRG, under that, you said that you can tap a market. It has a potential of tapping about $5.7 billion of market in that space. You also said that inorganic growth from that particular company is something that you look at. So what are the options and opportunities available there?
So again, in this space of information, the leaders command a premium, and DRG is in that category, which is a leader. It commands a premium because customers rely on the information that DRG gives. But there are many small companies which are doing particular niches in the same industry. And those are the areas that we could acquire and then cross-sell those products. So there's a lot of synergy benefits available, and the customer also has a great degree of comfort and confidence if DRG has acquired it, because in that process of acquisition, DRG will do a thorough diligence, and only those companies which fitted into the high standards that DRG has. So that's what is one area of growth. So the way I look at DRG is really, one is organic growth, which it has been doing, And again, I add on top of that is the acquisition that we could do. And that's in some ways even a strength which we bring to the table, because just of our sheer experience, and as they say, in our DNA, M&A is also part of it.
Yes, it's part of your DNA, and the Abbott deal was a big example of that, where you raked in a lot of moolah. Now, that money obviously is going to come handy for all these acquisition purposes and going forward for the company. At the moment, though, you are not cash rich. The cash which is expected to come, about 6,000 crores, which is still left with Abbott, is going to come in tranches. At the moment, you are under debt because you bought Vodafone's stake last. So how are you going to fund this deal, and are you okay with a huge amount of debt burden on the company?
So if you look at it, there is not a huge amount of debt burden on the company. Our net worth today is 12,000 crores. And as you correctly said, about 6,000 crores will come from Abbott in the next 2.5 years. In addition, in the next couple of years, we will also get more than 6,000 crores from Vodafone. And therefore, whatever debt we take today, it's not going to be a long-term one. And in fact, we will always have this situation that we will keep getting debt. So wherever there's an arbitrage of the amount of money that we can earn on the debt and the cost of the debt, we will use to our advantage. And therefore, when we are going into, let's say, financial services, we will lever up that balance sheet of financial services. Because if you have an NBFC and if you don't take enough debt in it, you can never make a return. So there will always be this to see that we get the best advantage of the balance sheet we have. Only thing I can say is that we will always be conservative and see to it that there is enough of a risk profile is maintained.
Right. Talking about risk profile, of course, after the Abbott deal, you've always maintained that you will make investments. They'll be short-term in nature, and they will reap good benefits for the shareholders. Now, Vodafone deal, well, you have 11% in the company. 6,000 crores have been spent by the company for buying out that particular stake. Does that worry you with that kind of an exposure?
I don't think it worries us, because what I understand is that, yes, there are issues now, but what we had, the assumption that we had gone into when we invested still hold true. That is that we would be able to exit between 2 to 3 years of our investment date, that we will get a return somewhere in the 17 to 20%, and the exit would be either through an IPO or, if the FIPB rules allow it, through sale to Vodafone or a third party. And from whatever I see of the environment, that should still hold true.
Right. Your second tranche that you bought of Vodafone stake was a very timely move, because just days before that, the Supreme Court had favorably given a verdict in favor of Vodafone. And then you bought that stake and you made the announcement. But then tables have turned again. And it's uncertain times. Do you think with this retrospective tax implication now with Vodafone, and that's still looming large for the company, the government is probably being vindictive?
I think this is an issue between Vodafone and the government, and you should ask Vodafone this question.
How you, as a big shareholder in that company, how do you feel about your investments also? Some of your critics also say that the investment which was envisaged to be only for a year or two could actually land up being for 4 to 5 years. Do you agree with that?
I don't think that is a correct interpretation. My own view is that, as I said, that between 2 to 3 years from the date of investment, we should hold this, and I still would stick by that, and again, time will tell us.
But uncertain times, does that worry you? Is what I wanted to know.
It's not worrying me, because, as I said, you have to take it in the long term. There are ups and downs. If uncertain times worried me, then you would not be in business. And especially in the Indian environment, we go through the highs, we go through the lows. That's part of business.
Real estate is again another sector in which I think your group has made big moves. Your presence is actually felt, especially in the upmarket areas in Mumbai. You've got a Baikala land, you've got one plot in Worli. You're also looking at Mahalakshmi, probably, if you do agree with me. And going forward, do you think that is emerging as one of the core areas for business for your group?
So again, I don't want to mix up your viewers. So yes, we are looking at real estate as a good area of growth in our group in a separate company which is called Piramal Realty. That's a company which is a private company. It's not listed on the stock exchange. And I think, yeah, we are in that space focusing on really Mumbai area as the big area and more relative in the higher end of businesses. So we have acquired this plot from Hindustan Unilever at Worli Seaface, and we have also done the acquisition of the Bhaikala, the Mafadlal land, and yes, the Mahalakshmi is also an area that we are investing in.
Right. Okay. Thank you for that confirmation. And talking about the real estate sector, and here I'm talking to you as somebody who's heading the Piramal Group and not Piramal Healthcare, of which real estate is not a part of. But talking about the real estate space, how do you see your vision for future? Is that becoming a really large business for the group? Is that something that you have placed your bets on?
We have. That's one of the places that we have put our bets on, and I'm quite excited about this space. This is an area which plays to our strengths. We have been in this space earlier. Again, I think as the environment is evolving, those groups which have a high values and which have known for integrity and ethical behavior are going to move ahead in this, whether it's with approvals with the government, whether it's with the consumers. And I think so our knowledge of the industry, the reputation that we bring in should both be pluses for us.
Actually, it's the right time to bring in the reputation bit as far as real estate is concerned. Now, talking about real estate, you have made big moves. You have actually hoarded a lot of plots in prime areas, but you haven't really launched any of the projects. Your Bhaikala project was due for a launch last year. Is it not the right time?
No, in fact, Bhaikala we acquired towards the end of, it's not been even 1 year since we acquired it. And we are very clear, we don't want to launch until there is a clarity of the approvals that we have got. And we can see, again, that really comes into the whole ethical question and the values. We don't want to, when we go to the customer, we want to be able to tell the customer that you could get your house in a predetermined time. And if you don't have the approvals, it's very difficult to give that assurance. And that's why we are holding back. Sometimes it's at a cost to us, but we'd rather be sure and then go back.
Right. So real estate sector at the moment, how do you think it's looking there?
So the real estate sector, at least for us, is looking good because this is a time when we want to invest in and there's not so much of money chasing the plots. So a few years ago, it was really on a high. It's not so. So it's a good time for us. And I think that the demand for real estate will continue. People will flock to come to a city like Mumbai. And therefore, by the time when we are ready with the flats, we should be in a good place.
So the valuation expectation for land deals have also come down, you're saying?
They have significantly come down from what they were even, let's say, in 2010.
Right. Mr. Piramal, your son Anand has been also learning the ropes of the real estate business. He's been controlling it, as I hear. So are you really firming up the succession plan also going forward? Nandini focusing more on the pharma business and Anand probably looking at more of realty. Is that what is shaping up?
No, there is no such plan. I think I hopefully am, both me and my wife Swati are young. We don't have to think clearly of a succession. And it's not that because they are doing, one is doing pharma and the other is doing real estate, that's how the businesses will be allocated. It's just temporary.
And talking about the overall de-risking of the group as well, now that you have so much investments in Vodafone, telecom sector is not necessarily looking the best, its best at the moment. Real estate you have one. Are you looking at other sectors also for investment, for de-risking your entire portfolio, for getting better returns?
I think we have enough de-risk our portfolio, and whatever the areas that we are in today, those are the areas we'll continue to be for a little while into the future. I cannot say forever, but yes, as of now, I don't see us going into any other new sector. So if you look at the sectors, we are in quite a few. So in Piramal Healthcare, we are in the pharmaceutical and healthcare related sector, where I also put DRG. We are in the financial services, where I would put the Vodafone as one of the areas that we've invested in, and we are getting into defense. So these are the three big sectors as far as healthcare is concerned. Then of course we have our real estate business, and we have our glass business. So these are good enough sectors, and there's a good, if you look at risk, there's enough diversification, there's enough geographic diversification as well. So I think it's a good position.
Right, you have actually recently only created a large footprint with the two acquisitions that you've made. Any other geographies that you're looking at going in, and in drug discovery, are more acquisitions probably lined up?
So our focus in the drug discovery is now really to invest in the molecules that we've got and the acquisitions we've done, and to move these from development into the market. So that's going to be our focus, rather than getting too many new things. There could be some small niche areas that we get into, but by and large I think we have a good enough portfolio to push forward into the market today.